To take an example, back in January when we put a tariff on washing machines, that was a 15% tariff. The price of washing machines subsequently rose by 17%, the largest jump on record for washing machines. And I think what is happening is that people are being confused by the idea that if you place a tariff on a foreign good, that somehow that doesn't pass through to the domestic consumer. So let's take, for instance, automobiles. If there is a 25% tariff on automobiles, autos make up about 6% of CPI. If we got 100% pass-through of that 25%, which we saw in washing machines, that would add 1.5 percentage points to inflation. Even if we only get a 15 pass-through, that means a 1% shock to inflation just from automobiles. And obviously, the Federal Reserve has a dual mandate. The first is full employment, which we reached quite a while ago. The second is price stability. Right. And as the inflationary pressures come through from tariffs, the Fed is going to have to continue its tightening or actually pick up the pace.
Scott, you said this could be the last hurrah in your tweet. How long could that hurrah continue, even if you end up being right?
Well, that's a great question. Markets, as I remind people, tend to react slowly to changes. And obviously, we're in a seasonally strong time for the market. I think that this could go on through the rest of the summer before we start to see some sort of a correction occur in September or October.
Scott, doesn't it, the scenario you lay out there, it seems like you have to have things get to a certain extreme. In other words, you have to go down a few steps before this filters into measured inflation, before the Fed perhaps reacts to it and doesn't just overlook it, even if we get there. So is that something you think the market is going to kind of panic about in advance, or will we have to see further intensifying of these trade measures before the market takes notice?
Well, I think the market has sort of a cognitive dissonance, and that is that, it doesn't want to recognize how bad the consequences to current policy could be. And so there's a willingness to, just ignore the worst case outcomes or the harsh outcomes and to say everything looks fine. And we see it currently. We see earnings extremely strong as a result of the tax cuts. All the positive benefits that we have been discounting or talking about since last fall or December now passing through, and the market is following through. Ultimately, I think they're going to have to be basically confronted with cold water in the face and see, wow, these imports are actually starting to drive up inflation, and then have the Federal Reserve have to react.
So just to play devil's advocate, so far what we have seen just represents a small chunk of the economy and the overall consumer price basket. I mean, washing machines are tiny. If we're talking about autos, that's something completely different. So the optimists would say it's a small fraction of the economy, and it might actually bring countries like China and Europe to the table to eliminate trade barriers. And the market is showing that the U.S. has less to lose than a country like China, and therefore this will all work out.
Well, I think that is a great argument, and that's the argument that has been basically agreed to by the market or presumed. But I do believe now that President Trump and Chairman Xi has basically shown us that we're not going to back down. The United States will not back down. China won't back down. So, I would be completely proven wrong if suddenly, the U.S. policymakers in Washington and in China completely reverse course. But what I'm seeing is just the opposite. I'm seeing a willingness to dig in. The other thing that's interesting to note here is when you look at valuations on equities in general, on a forward basis, our work shows that we would expect a return of about 1% per annum on equities based upon historical valuations. So we're not having this event occur at a time when stocks are cheap. We're having it occur at a time when stocks are rich, and that makes stocks all that more vulnerable to the bad news scenario.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.